Breaking news from the Social Security Administration is making waves across America right now. And if you're counting on your benefits this holiday season, you need to hear this. The payment schedule just shifted in a way that could put money in your account sooner than you planned. We're talking about $1,900 checks that were supposed to arrive on their regular date. But due to an unusual calendar situation this December, the Treasury Department has made a critical adjustment. This isn't speculation or clickbait. This is official information directly from the SSA that affects millions of beneficiaries nationwide. The reason? Federal banking regulations prohibit benefit payments from being processed on federal holidays, and with Christmas falling midweek this year, the entire payment timeline has been recalibrated. If you're scheduled to receive supplemental security income, Social Security retirement benefits, or disability payments during the affected period, your deposit date has changed. Stay with me for the next few minutes because I'm breaking down exactly who's getting paid early, which specific dates are affected, and most importantly, how you can verify your own payment status right now through your My Social Security account. Let me tell you something that's happening right now that perfectly demonstrates how the Social Security Administration operates when federal holidays interfere with their standard payment calendar. The entire system is built on precision and reliability, but when you throw Christmas into the middle of the week, everything has to shift. And here's what makes this situation particularly interesting for beneficiaries in December 2025. The SSA has an ironclad rule that they've maintained for decades, and that rule states very clearly that no benefit payments can be distributed on federal holidays, weekends, or days when federal banks are closed. This isn't just a suggestion or a guideline that they follow loosely. This is federal regulation that governs every single payment that goes out to roughly 70 million Americans who depend on Social Security benefits every single month. Now, when we talk about this specific payment adjustment happening right now, we need to understand exactly which beneficiaries are affected and why this particular holiday creates such a significant scheduling challenge. The Supplemental Security Income Program, which serves some of the most vulnerable Americans, including elderly individuals with limited income and disabled adults and children, normally sends out payments on the first day of each month. That's the standard schedule that millions of people have organized their entire financial lives around. They know that on the first of the month, their SSI payment will be deposited into their bank account or loaded onto their Direct Express card. But here's where December 2025 throws a wrench into that perfectly organized system. January 1st, 2026 falls on a Thursday, and that's a federal holiday, New Year's Day. The federal government shuts down, federal banks close their doors, and the entire electronic payment processing system that handles Social Security distributions goes dormant for that 24-hour period. So what does the Social Security Administration do when faced with this calendar conflict? They don't just skip the payment or delay it until the next business day. That would leave millions of Americans without their expected income right at the start of the month when rent is due, when utility bills need to be paid, when grocery money is at its lowest point. Instead, the SSA shifts the payment forward. They move it up to the last business day before the holiday. And that's exactly what's happening with this particular payment cycle. The SSI payment that would normally arrive on January 1st is instead being distributed on December 31st, 2025. That's New Year's Eve, the final day of the year, and for many beneficiaries, that means getting their money 2 or 3 days earlier than they would if the holiday wasn't interfering with the schedule. Now let's talk about the actual dollar amounts involved here because the title mentions $1,900, and I want to make absolutely sure everyone understands where that number comes from and whether it applies to their specific situation. The maximum federal SSI benefit for an individual in 2025 is $943 per month. That's the absolute ceiling for what a single person can receive if they have no other income and they meet all the eligibility requirements for the program. For a couple where both individuals qualify for SSI, that maximum amount increases to $1,415. But here's where things get interesting and where that $1,900 figure starts to make sense. Many beneficiaries don't just receive SSI, they're also getting Social Security retirement benefits or Social Security disability benefits at the same time. This is called concurrent benefits, and it's actually quite common among the senior population. When someone worked enough to qualify for Social Security retirement based on their own work record, but that retirement benefit is relatively small because maybe they had lower lifetime earnings or they didn't work as many years, they can still qualify for SSI to bring their total monthly income up to a livable level. So you might have someone receiving $700 in Social Security retirement and then another $400 in SSI to supplement that amount. When you start combining these different benefit streams, especially for couples where both people are receiving multiple types of benefits, you can absolutely reach payment amounts that approach or exceed $1,900. Additionally, some states provide supplemental payments on top of the federal SSI benefit. California, for example, adds several $100s to the federal SSI amount for beneficiaries living in that state. New York, Massachusetts, and several other states have similar supplemental programs. When you add state supplements to federal SSI and combine that with Social Security retirement or disability benefits, these payment totals can grow substantially. The payment schedule situation becomes even more complex when we look at how regular Social Security benefits are distributed throughout the month. Unlike SSI, which goes out on the 1st, Social Security retirement and disability benefits are staggered based on the beneficiary's birth date. If you were born between the 1st and the 10th of the month, your payment arrives on the 2nd Wednesday. If you were born between the 11th and the 20th, you get paid on the 3rd Wednesday. And if your birthday falls between the 21st and the 31st, your payment comes on the 4th Wednesday of each month. This staggered system prevents the entire Social Security payment infrastructure from being overwhelmed by trying to process 70 million payments simultaneously. It spreads the load across multiple weeks and ensures that the electronic payment system can handle the volume without crashes or delays. But there's another category of beneficiaries who don't follow the birth date schedule at all. If you started receiving Social Security benefits before May 1997, you're grandfathered into the old system, where everyone got paid on the 3rd of the month regardless of their birth date. These beneficiaries, often the oldest recipients in the entire program, continue to receive their payments on the 3rd. And just like with SSI, when that 3rd falls on a weekend or holiday, the payment gets moved to the preceding business day. So in months where the 3rd lands on a Saturday, Sunday, or a federal holiday, these long-term beneficiaries see their money arrive earlier than expected. The mechanics of how these payments actually reach your bank account is something that most people never think about, but it's actually a fascinating system that involves multiple federal agencies working in coordination. The Social Security Administration determines who gets paid and how much. They process all the calculations for cost of living adjustments. They handle the deductions for Medicare premiums. They apply any withholding for federal taxes if you've requested that. And they compile all of this information into payment files. These files are then transmitted to the Treasury Department's Bureau of the Fiscal Service, which is the federal agency actually responsible for moving money out of the government's accounts and into the accounts of beneficiaries. The Fiscal Service works with thousands of financial institutions across the country, from massive national banks to tiny rural credit unions, ensuring that when a payment is scheduled to arrive on a specific date, it shows up exactly when it's supposed to. The Direct Express card program adds another layer to this payment ecosystem. For beneficiaries who don't have traditional bank accounts, the Direct Express prepaid debit card provides a safe and convenient way to receive federal benefits electronically. The card is issued by a private financial services company under contract with the Treasury Department, and it functions like any other debit card. When your payment date arrives, the money is automatically loaded onto the card, and you can use it for purchases, withdraw cash from ATMs, or transfer money to other accounts. The Direct Express system processes millions of benefit payments every month, and it follows the exact same schedule as direct deposit to bank accounts. So when a payment date shifts because of a holiday, Direct Express cardholders see their funds available on the adjusted date just like everyone else. Now let's address something that causes confusion every single year during the holiday season, and that's the difference between when a payment is dated and when it actually becomes available in your account. The Social Security Administration might list a payment as being dated December 31st, but depending on your financial institution's processing schedule, you might actually see that money available on December 30th or even December 29th. Some banks and credit unions make direct deposit funds available as soon as they receive the payment file from the Federal Reserve, which can be a day or two before the official payment date. Other financial institutions hold the funds until exactly midnight on the payment date before making them accessible. This variation in bank processing policies means that two people receiving the exact same Social Security payment on the exact same date might see their money available at different times depending on where they bank. This early payment situation also raises important questions about budgeting and financial planning, especially for beneficiaries who are living on fixed incomes and managing every dollar carefully. When you receive a payment earlier than expected, it can actually create a slight timing challenge for the following month. Think about it this way. If you normally get paid on the first of each month, you've probably organized your bill payments around that schedule. Your rent or mortgage might be due on the first, your utilities might be set up for automatic payment on the second or third, and you've calculated everything to align with when that money hits your account. But now you're getting your January payment on December 31st instead of January 1st. That's wonderful for having money available for New Year's celebrations or for covering any year-end expenses. However, it also means you're going to wait a full month until February 1st before your next payment arrives. For someone living paycheck to paycheck, or in this case, benefit payment to benefit payment, that timing shift requires some adjustment in how you allocate funds across the month. The Social Security Administration publishes a complete payment schedule every year, usually in the fall before the new calendar year begins. This schedule lists every single payment date for the entire year, clearly marking any dates that have been adjusted because of weekends or holidays. You can find this schedule on the SSA's official website at ssa.gov, and it's worth printing out and keeping somewhere visible in your home so you always know exactly when to expect your payments. The schedule shows not just the regular monthly payments, but also any special payments or adjustments that might occur throughout the year. If there's a cost of living adjustment announced, which typically happens in October and takes effect in January, that information is clearly noted in the schedule, along with details about when beneficiaries will receive their official notice showing their new payment amount. Speaking of cost of living adjustments, that's another aspect of Social Security benefits that ties directly into these payment discussions. Every year, the Social Security Administration evaluates inflation data from the third quarter and determines whether benefit amounts need to increase to keep pace with rising costs. When inflation is high, the cost of living adjustment can be substantial. We saw this in recent years when COLA increases reached levels not seen in decades. When inflation is lower, the COLA might be more modest, but it still provides some protection against the eroding purchasing power of fixed benefit amounts. The COLA applies to all Social Security benefits, including retirement, disability, and survivors' benefits, and it also affects SSI payment amounts. When a COLA takes effect in January, beneficiaries see their increased payment amount starting with that first payment of the year, which in the case of SSI recipients receiving their payment early due to the holiday schedule would be the payment arriving on December 31st. One thing that catches people off guard every year is the interaction between the Social Security COLA and Medicare Part B premiums. Most Social Security beneficiaries who are enrolled in Medicare have their Part B premium automatically deducted from their Social Security payment each month. When there's a COLA increase, the Medicare premium usually increases too, because healthcare costs tend to rise along with general inflation. The law includes something called the hold harmless provision, which protects most beneficiaries from seeing their net Social Security payment decrease because of a Medicare premium increase. Essentially, if your Medicare premium goes up by more than your COLA increase, the hold harmless rule limits how much your premium can rise so that you don't end up with less money than you had the previous year. However, this protection doesn't apply to everyone. High-income beneficiaries who pay income-related monthly adjustment amounts on top of the standard Part B premium don't get hold harmless protection, and neither do people who are new to Medicare or who aren't yet collecting Social Security benefits. The question of whether you can trust these early payment dates is something that weighs on people's minds, especially for beneficiaries who have experienced payment delays or problems in the past. The reality is that the Social Security Administration's payment system is one of the most reliable financial operations in the entire federal government. They process billions of dollars in payments every single month with an accuracy rate that exceeds 99%. When the SSA says a payment will arrive on a specific date, you can bank on that happening. The infrastructure supporting these payments includes redundant systems, backup protocols, and layers of verification to ensure that nothing falls through the cracks. Even in situations where there have been government shutdowns or funding debates in Congress, Social Security payments have continued without interruption because they're considered mandatory spending that doesn't require annual appropriations. If you want to verify your exact payment date and confirm that your information is correct in the Social Security Administration's records, the best resource available to you is your personal My Social Security account on the SSA website. This free online account gives you access to your complete payment history, shows your scheduled future payments, displays your benefit amount after any deductions, and provides copies of important documents like your annual benefit statement and your SSA 1099 tax form. Setting up a My Social Security account takes just a few minutes and requires you to verify your identity through a secure process. Once your account is active, you can log in anytime from any device to check on your benefits without having to call the SSA's phone line or visit a field office in person.